The global stage has once again been rocked as U.S. President Donald Trump announced an aggressive escalation in the ongoing trade war with China, declaring an immediate implementation of a 50% tariff on all Chinese imports. This move, sudden yet unsurprising to those familiar with Trump's economic doctrine, has sent tremors through global markets, shaken diplomatic circles, and ignited a fresh wave of debate on the future of international trade. Trump, now well into his second term as President of the United States, has long held a confrontational stance toward Beijing, and this latest maneuver reinforces his vision of America First economics in the most emphatic terms yet. In his official statement, Trump accused China of continuing its unfair trade practices, intellectual property theft, and market manipulation, stating that previous efforts at negotiation had failed to yield meaningful reforms. As such, this tariff hike is being positioned by the Trump administration as both a defensive measure to protect American industries and a punitive one to signal that the era of passive economic engagement is over. Markets reacted immediately. Wall Street plunged into volatility as investors tried to calculate the impact of this sweeping decision. The Dow Jones and Nasdaq dipped sharply, and Asian markets followed suit, with the Shanghai Composite suffering its worst single-day drop in months. Meanwhile, the Chinese yuan weakened against the dollar, reflecting investor concerns about reduced export activity and potential retaliation from Beijing. At the heart of the matter is the sheer scale of the tariffs. This isn't a targeted move against specific sectors or products. It's a blanket tariff covering everything from consumer electronics and textiles to machinery and automotive parts. The cost to import goods from China has effectively skyrocketed overnight, and American businesses, particularly manufacturers, retailers, and small importers, are bracing for impact. For the average American consumer, this could mean immediate price hikes on everyday items: smartphones, televisions, toys, clothing, and even food products. Critics argue that the tariffs function as a tax on Americans, as businesses often pass increased costs down the supply chain. Some economists estimate that the average household could see hundreds of dollars in additional expenses per year. But for Trump and his administration, the long-term payoff is worth the short-term pain. They argue that dependence on Chinese goods has left America vulnerable and that this drastic move will finally push companies to bring manufacturing back home or seek alternative supply chains in friendly nations. The White House insists that this tariff is part of a broader strategy aimed at rebalancing the U.S.-China trade relationship.